All right, time to look at the metals. Um, I was expecting a counter trend bounce, expected to be very convincing, to lure a bunch of traders in prematurely. Um, at most, I thought gold, at most it might make a marginal new high. I did not think silver or miners would make new highs. Doesn't look like gold is going to make a new high either. Um, at this point, it looks like the cycle has left translated on day 5. Uh, these cycles tend to last anywhere from 30 to 50 days. Today is only day 6, so we should have end of October, beginning of November before this bottoms. If this was a healthy daily cycle, we would not be seeing this kind of a retrace this early in the cycle. So the odds are very high that the daily cycle has topped and is starting to left translate. And once the price moves below this pivot right here, this is the daily cycle low. Once price moves below that, then that will be confirmation that we now have a left translated daily cycle in progress. And that's what should happen during the declining phase of the intermediate cycle. So this was the start of the intermediate cycle. This is the advancing phase of that cycle. At some point, the cycle, larger intermediate cycle, has to top, and then you get the declining phase of the cycle. Pretty sure that's what started. Well, actually, it started here, but pretty sure that this daily cycle rolled over yesterday. So you can see there was already warning signs when this drop into this daily cycle low broke the intermediate trend line. That was a warning sign that the odds were high at that point that the intermediate cycle had topped right here as this little double top, and we had started the declining phase. But as I said, we were almost certainly, especially after such a powerful rally, there was going to be dip buyers that came in and try and buy the dip and push this back up. But when you're in the declining phase, that first dip is too early. An intermediate cycle low should progress at least as an ABC decline. And of course, here's our A wave down, we've got our B wave bounce, and we should be starting the C wave decline now. All right, so a bare minimum pullback, in my opinion, for an intermediate cycle decline, and this really is for almost any asset, is at least back to the 38% Fibonacci retracement. Even during the baby bull, the intermediate decline pulled back to the 38% retracement. And this first A wave down only made it to 23, so it's the odds are very, very much against this being over right here. It's just not deep enough, and we don't have that ABC structure yet. So at the very bare minimum, I think between now and let's call it maybe early November, gold has to come back down to at least test this 1450 zone, and I kind of think a more realistic target is the 50% retracement and come back down and test this congestion zone right here. That, in my opinion, is more realistic target, and it's even possible that we could come back down to this 62% Fibonacci level and test this. This is the breakout from that 3-year basing pattern. The top of that pattern came in right around 1370, 1380. So it's even possible that the C wave could come down and test this zone right here, and that would not be unusual. That was actually it was about a 6-year basing pattern with the high of that pattern at about 40, I believe it was, and the low, of course, was the bear market bottom at 1050. So a very long basing pattern, 6 years. Um, it's not unusual at all for a basing pattern that long to have to retest the breakout before it can really get started in earnest. So, not out of the question that we come back down to the 62% Fibonacci level during the C wave decline. Another big warning sign yesterday, silver erased all of um, last week's big rally. So, that probably shouldn't happen this early in a new daily cycle. If the daily cycle is healthy, it was going to right translate. This is more almost certainly a sign that the cycle is left translating. That means that the larger intermediate cycle is now in decline. And all that means is that we're making lower lows and lower highs. And that's probably the pattern here. You can see this high didn't come anywhere near this high. So all we need now is one more confirmation. If silver comes down and breaks below here, then we'll have the pattern complete of lower lows and lower highs, and that will confirm that we're in the declining phase of the intermediate cycle. Similar similar picture in the mining stocks. You can see the A wave down briefly penetrated the 50-day moving average, but this average was rising very aggressively, and it can often take a couple of attempts, and this works in both directions. When these averages are moving this strongly, either up or down, often the first attempt to break through, either coming down to turn the average back down, or if this was in the, if you flip this chart over and this was a very powerful decline, then the first attempt to regain and turn the moving average back up often fails, and it usually takes another try before turning it back down. But you can see GDX did marginally close below the 50-day moving average yesterday, and that's probably a warning sign that prices is going to close back below this. We're going to get our C wave decline. I think there's probably a fairly good, I'd say there's almost, 100% chance really that this gap is going to close right here, and there's a decent chance that this gap could close as well. I think these two gaps down here are breakaway gaps. I don't think these will ever fill, but this gap here is definitely in jeopardy, and if price gets anywhere close to this gap here down around 24, then I think hedge funds will pile on the shorts to fill this gap as well. So a couple potential targets for where this corrective move could go to before it's done. And then finally, looking at the juniors, they were a bit, and have been a bit weaker than the majors, and they lost the 50-day moving average by a much more significant amount yesterday. And I think that's a pretty good indication that price is preparing to move below and hold below this moving average, and then the average should turn and start moving back down during an intermediate decline. It almost always does, you can see here. And that's one of the confirmations that the declining phase of the intermediate cycle is in progress, is that price moves back below the 50-day moving average and turns the moving average back down. And then at some point you get down here at the bottom, everybody becomes super bearish. Nobody can see any fundamental reason why or how the price can turn back up, and that's the point at which you just run out of sellers, and then the market bottoms and you turn and go the other way. So pretty sure we're in the declining phase of the intermediate cycle, the same as we were here. And ultimately, the same thing will happen this time. We'll find a bottom here, probably end of October, maybe beginning of November. And then we'll start our next rally, and the next rally should make a higher high above these levels. Probably, I'd say a significantly higher high above these levels. But we need to get through the declining phase of the cycle. We need to turn everybody bearish. That's the fuel for the next rally. And I think that's what we're starting now.